following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, looking good, Billy Ray, feeling good, Lewis. Okay, I'm going to present some things that I think are relatively important today. What we're, the market was hit with a perfect storm last week on Thursday and Friday, starting with McDonald's, and then right at McDonald's earnings came out, and then we had the Mario Draghi speech where they were going to use quantitative easing again, and then of course on Thursday night, when the earnings came out for the big three, Microsoft, Amazon, and Google, the market went crazy. The Nasdaq was up 266 points in one day. I mean, we haven't seen that since Hector was a pup, and I think he's 15 years old now. So these are outlier events, of course, but they do, propel the market a lot higher. And then on top of that, right before the market was supposed to open, China dropped rates by 0.5%, which some people were expecting 0.25%, and then they reduced reserve requirements. And so, it was the old risk-on routine again, and away it went. So what I wanted to do is I just want to go in and look at these charts. And remember, I don't know diddly squat about the fundamentals, don't profess to, don't want to know. All I want to know is to look at the charts. After looking at all these charts, it is very clear to me, and whether I'm right or wrong or not, I'm not sure yet, but we'll know in the next day or two, because the timing on this is very, very close, I believe. But we are very similar to where we were on March the 5th of 2009, only what we're looking at is a mirror image of that. Like we had the perfect storm this year in 2009, you remember, we had, the massive Too Big to Fail program with Hank Paulson, talking every time that they wanted to raise money and they couldn't get it in Congress, the stocks would drop 500 to 600 points as we finally got down to 600 and 6,400 in the Dow Jones, which was the 61% retracement off the 1987 low. So whether this is the same type of scenario or not, I don't know, but I want to post the chart that I think is by far the most important. I've done it every week now since I started watching this back on August 24th. If you'll notice what's happened here, this is the New York Stock Exchange chart for the last 20 years. Excuse me. And if you'll notice these red arrows there, these are the rallies back after the market had taken out the previous pivot lows. In other words, it breaks below a pivot low and then it rallies back. If you'll notice, in 2000, the market rallied back into 2001 to a 78% retracement. In 2007, we rallied back to a 61% retracement. And here we are now when we broke down into August 24th. And then we rallied strongly into this, what we believe is it is a 61% retracement of the move in the New York Stock Exchange Index. So the best thing for me to do was to look at these indices and then look at the stocks behind some of these, because they're heavily weighted in some of these instances. And you want to see if there are any other compelling patterns that might tell us that this might be something really important to look at. So that's what we're going to try to do here this morning. Now, if you'll remember, on the 28th of September, we were having a super full moon. That's when the moon was at apogee, and it was as bright as it gets, and there was a lot of stuff about it. And we came into a perfect bottom there. We were right at a 61% retracement in all of the indices. We were making Gartley patterns. The market rallied up for a week. It pulled back into October the 8th, and then October 8th was the key date because it came down and made a test of those Fibonacci numbers but for the third time, and then it had a huge day up, and away it went, and a long, just kept going, which it should have, because it was breaking out of all those areas of March. Let's try it again. What month is this? September 17th. And so now we've gone from September 28th, and now we're coming into the full moon tomorrow, and it's a full moon that comes in late the 26th or early the 27th. And so it could happen anytime that we could be reaching a cycle high up in this area. So I want to walk through some of these things and let you decide, whether you think this is really a bullish spot or not. Now, the first one we're going to look at here is the New York Stock Exchange Index. This is completing a perfect Gartley here. We are almost at the exact 61% retracement in this. If I look at it on a little bit different time frame, I want to move over to a give me 1 second here. I want to put it on a that was the smaller time frame. I want to put it on the daily so you can see it a little bit better. You'll notice that it's very, very close to the 61% retracement. The important thing is we went in and we filled the gap from August the 21st. And now we're still down on the year, but we're not quite at the 61% retracement level, but we are completing a three drive to a top pattern up here that we completed. I believe we completed it on Friday. Maybe it has some more to go, because sometimes a perfect storm will, the rain will keep coming. So we'll see if that's going to be the case or not. So as you can see, that is completing the Gartley pattern that we looked at. Now, if we take a look at the Dow Jones Industrial Average, this is the really interesting one, because this is a price-weighted average, not a cap-weighted average, and we are within. We came within 6 points of the exact 786 retracement on Friday, and remember, all of this was happening, in pre-market. It was basically. Really going crazy. Of course, when the Dow opened higher, it just kept running and running, and which is, no one wants to stand in front of that, for sure. I mean, that's a tremendous amount of bullish enthusiasm that you don't need to worry about. So that's the Dow Jones at the 786 retracement. Now, if we go a little bit farther now, and we're going to look at the Nasdaq, first we'll look at it on the larger time frame. And we'll pull it up. You'll be able to see it. It also is completing an ABCD pattern, but it is only looking at the market from a point of view of the fact that it is over an ABCD pattern, and it is weighted by these big stocks that are in there: the Amazon, the Microsoft, the Facebook, the Apple. Those are the ones that are really big. And we're going to look at some of these stocks to see if these patterns are telling us, yeah, this is really a valid breakout or not. So we want to we'll keep an eye on that. Okay, then we're going to look at the Nasdaq with a little bit shorter time frame. And what it's showing here is that the time between the AB leg and the CD leg comes in today, well, either Friday or today. And that means the number of bars was equal on the way up. This is true of the daily or the 4 hour. It doesn't make any difference, but you'll see there's a great deal of symmetry that comes into this. And since we've completed that big ABCD pattern, one would have to think there would be at least a correction, to see what's going to happen, with the market that we're watching right now. All right, the next one we want to watch is the cap-weighted index of the S&P 500. And so now we're going to look at that technically, and we'll see what it says. As you can see, when you're looking at this cash S&P chart, there was 18 trading days from the low of August the 24th to the high on September the 17th. And then we sold off to a 78.6% retracement, and 18 days came in Friday. And as you can see, we did make a 786 retracement on the cash S&P. We actually closed about 40 cents higher than the market, than the 786 retracement. But that's not unusual, because if you look at what happened on September the 17th, we also went about 40 or 50 cents higher before reversing. Well, we left a bunch of gaps here, but we'll see whether gaps will be filled or not. That's the main thing that we want to keep a look at. Now, we want to look at the Dow Jones Transportations here, because you can see this market is still in a very profound bear market for the last 18 months. We could be completing an ABCD pattern up about another 300 points in the transportation, and it could be that the Dow is going to be pulling that up. I don't know, but it's still in a pretty substantial downtrend, in my opinion. Now, if we take a look at the Dow Jones Utilities, this is an interesting one, because this, 1 second, please. If you'll notice, the Dow Jones Utilities, we topped way back here in January of this year, and we've been down, quite a bit ever since. Now we're having these rallies back. If you'll notice, we've had two parallel rallies, one from June through August, and another one from September to where we came in on Thursday. And then, of course, the market was down sharply on Friday, with the rest of the market being up. That could have been related to people just wanting more risk, and they do not want the safety of utilities that pays good dividends, and they were just moving into higher risk things. I don't know, but it was down quite a bit. So that's another reason. We are in downtrends in the transportation and in the utilities, and this could all change this week. We don't have to wait very long here, folks. If I'm wrong, we're going to know right away. Now we want to look at the Sox Index, which is our semiconductor index, and it also, these patterns are they're everywhere. That's basically the bottom line. But as you can see here on the SOX, we did complete a perfect ABCD pattern. We did go a little above the 61% retracement so far, but the ABCD was perfect. And again, it had that similarity of the AB leg equal the CD leg in time. That was telling us that Friday most probably was a very significant date. And remember, we have a really key Bradley date coming in either Tuesday, Wednesday, and of course we're in the zone of the full moon now, so it could happen Monday, Tuesday, or Wednesday. But I don't think we're going to run away to new high grounds on this move right here. Now, the next one that I would like to show you, I think, is probably, I don't think we're going to be able to get this done here by the time we do it, but we'll start it, because if you'll remember back when gold was making its top at $13.92, we were trying to alert the folks here at TFNN that this market was in big trouble, and we're starting to see some of those same situations coming up in the S&P and the equity markets. So if you'll bear with me, we'll take care of this when you get back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Plus. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've posted into Tiger TV here the open interest figures on this rally that we're having in the stocks. And if you'll notice, equity section, they have open interest is dropping. And that's a bad sign. When prices go up and open interest drops, that's short covering. And once that is finished, the market has a vacuum under it, and that's what it usually means, that it's going to go down. If you remember back when gold was making the $1,900 level, we were watching that very closely day after day, that we were alerting to the fact that this was not a move to be buying because of the fact there was no new buying coming into the market. Now we're starting to see potentially, maybe that'll change today, but potentially that's what we have going on this week. We've had this perfect storm. I mean, everything looks wonderful. And all I did was, yeah, sure, it does look wonderful, but I just wanted to look at the charts and tell me how wonderful it really is. And that's what I'm trying to report to you here, that, this is something to just to have not to, to get in anybody's, to stop anybody's parade or anything, but I did think it's necessary to realize that when open interest drops and prices go up, that is short covering, and so we want to keep a close eye on that. Now, and when we come to the break, right after the break, I'm going to bring up the 5 big stocks that have caused most of this, and I want to go through those and show you what the patterns are. You make up your own minds whether you think it's worth anything or not, but we'll wait and see. If we take a look at the sectors that were the most bullish on the way up, you'll notice that the banking index hasn't quite made a 50% retracement yet from the high. It hasn't even taken out the February 17th level as of yet, but let's try that September 17th level as of yet, but it certainly could. Today, the 50% level comes in about a half a dollar higher, so we'll see what we're looking at. The stocks that we're going to be looking at, folks, are Amazon, Microsoft, Google, and Facebook. Those are the bigger ones, and I think those are the ones that really give us an idea of what we're looking at. Those are, that's like over 30-some%. We throw in Apple to that, it's like 35 to 40% of the whole thing, and that's really what we're looking at. Now, if we take a look at the small cap, and that had been a really leader. It topped back in June, and it has had a pretty big break. The important thing is that it did take out the lows of August 24th, and all we've been able to do since that time, even with this wonderful percent rally that we've had, and the S&P was up 10% from September the 28th when we had that super full moon to where we were on Friday. I mean, in most of it, I understand there's a lot of stocks going up. I mean, not just that. I mean, the big ones were going up, which, it's a cap-weighted index, but this is what you're supposed to see when things explode like this. But the IWM hasn't even, it's actually went to a 382 retracement of the high we made. It's not, and these had been the leader. The IWM and the banking index had been the leader on the way up, and they're not leading, where they are right now. And we'll do the next one we're going to look at is one of the really big ones, and that's the biotech, and that has not moved either. It's not even close to a 382 retracement of the high we made on September the 17th. So, excuse me, but this could all change. The rotation could start back into small caps and IBBs, and all this is wrong. I'm just showing you all the pictures that I'm looking at are telling me that there's some signs that say danger out here, and maybe this perfect storm is not really what it appears to be, because they've certainly sold it to everybody in this environment here. If we take a look at the German Dax market, that also has had a tremendous move since the super full moon. Remember that it made a double bottom down there at the 9,300 level, and it's rallied 1,500 points in a matter of 1 month. We're now completing the ABCD pattern there that is also a 1.27 along with the ABCD, and it's a 61% retracement from the high when we made back on August the 19th, and that's where the market started its big breakdown. So we assume that was a pretty significant cycle high. We're going to take a little break here. Market's going to open stronger again, so we'll see what happens here, and we'll be right back to discuss these big stocks that we're watching.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to look at some of these stocks now that are making this market run like a striped deer. And the first one we're going to look at is Disney. And as you can see here, we had that big top up around the 122 level. We broke. We've now rallied right into that gap. We hit that yesterday. It was a perfect ABCD pattern. Again, you see the perfect symmetry in that ABCD leg that we've seen in everything else. It's in all the indices, both Germany and also here, and we'll see what's going on. Now, the only one that hasn't had their earnings come out, of course, is is Apple, and that's due tomorrow, I believe, and that might be the second or third or fourth leg of the triple storm, a perfect storm, I'm not sure. The next one we're going to take a look at here is going to be Facebook. Here is another one that's in the news quite a bit. As you can see, we have that ABCD structure also completing, and we've gone up and made a butterfly pattern here in Facebook at the 1.618 level at 103. Now, these numbers on all of these charts that you're looking at are pretty much spot on. So there's not much wiggle room here at all. I mean, there could be a new high today, a slightly new higher high tomorrow, but no runaway. If we're really strong, the Dow up more than 100 points, and the S&P up more than 5 or 6, and the Nasdaq up more than 10, then you'll be able to see, that this thing is all wrong and it doesn't make any difference at all. But let's take a look at one of the really big ones. This is one of the higher cap stocks that everybody knows, and people understand it quite a bit, and that is the chart of Microsoft. And I'd like for you to see that we are completing a perfect 1, 2, 3, 4, 5 expanding triangle, also known as a reverse point wave. And what's interesting about this is the exact high was at 54, and that was the exact 1.27 of this triangle. So that's telling you that well, maybe this is really important. It closed near the lower part of the range. I don't know where it's trading today, but if we get above 54, then this is not a good pattern. It shouldn't have much more. Excuse me, 1 second, please. Shouldn't have any more wiggle room than that. If we go back and look at Microsoft during the June to November period, right before we had the big 30% correction, you'll notice that we had also another 1, 2, 3, 4, 5 expanding triangle finishing up right around November 1st. And November 1st is going to be on Sunday. So we're in a time zone where this could be, very, very important. So you've got this pattern that is completing, and it could be, and this was all part of the earnings that they have. It was up 10%. I mean, in one day. I mean, all it has to do is do that 10 days in a row, and it'll double or triple in price. Who knows? Now, if we take a look at Amazon, which I think is one of the world's great companies, if we take a look at Amazon, we're seeing two ABCD patterns that are here. We're also making a 1.27 expansion. Now, the market here opened higher because it opened almost $90 high, actually $75 higher. And the high was made right on the open, because if you'll notice that we closed right near the low of the day. Now, if we're really quiet today and then we should gap down tomorrow, we could leave a massive island reversal here. And if you look at the volume characteristics of this from the cycle between April and July, you'll notice that these large volume spikes happen during these gaps, and they're usually topping periods. I mean, it's really amazing. And this one happens to be, 64 trading days from the last one. Exactly. Another had a gap 64 days, a gap 64 days. The volume characteristics are related to the Fibonacci numbers of 17 and 21 is 786. 10 into 21 is 50%. 10 into 17 is 61%. I mean, all these are telling you that there might be something going on here technically, and that's all it is. I don't know the fundamentals behind it. That's just what that's what we're watching here as we look at this. So we've looked at Amazon and Microsoft, and now we'll look at Alphabet. Okay, we'll take a look at Alphabet and see what it looks like. And you'll notice here that, again, we have these same types of volume characteristics where we have big volume on this breakout. Again, the market opened higher at the 729 level. It closed right at the right near the low of the day, 702. Today, it opened unchanged to slightly higher. So again, if we get a gap down here tomorrow, then we're looking at something, a lot more sinister. But we have a butterfly pattern in Google. We have a ABCD pattern in Google. We have two ABCD patterns in Google. So that's what we're looking at. Now, this full moon that we have coming in, I think, will be important for whether it's going to be a top or not, and maybe it's just going to be a continuation of another leg up. But we have the Bradley date this week too. So we'll see. We did see that the super full moon had a pretty significant bottom in there because every indice was making a perfect Fibonacci retracement at that time, either 618 or 786, and the market exploded on October the 8th, and we've been for 3 weeks it's been a vertical move. Another indication on this Google chart is the last time Google gapped up $100, it came down and filled that gap and made a 61% retracement before going higher. So you don't have to buy those. These gaps will be filled, folks. Go back and look at these charts. Like Jim Twentyman says, defy human nature. Go in and look at the charts and see if you see any unfilled gaps. And that's the key to what we're watching when we see some of these things. So if you look at all of these stocks that we're watching, they're certainly not telling us that this breakout looks like it could be for real, because we're completing patterns. We're not reaching for patterns. With this perfect storm that we had, we were able to complete the patterns in Amazon, Microsoft, Google, and Facebook. If we didn't have that perfect storm of earnings, or the ECB dropping or leaving rates alone and China dropping rates, we wouldn't be at these levels. But we did hit that, and that's what markets are supposed to do. So just my words of advice here is wait a couple of days. If this market is strong on Wednesday and Thursday, then all of this is wrong, because these numbers are absolutely spot on. The market did what it had to do. It opened higher, closed near the lows on Amazon, Microsoft, and Google, and not Facebook, but Facebook was a little bit lower this morning. So all of that's telling us that, it looks like we're having one that is, it deserves your attention. I think this is as important time as we've had since February the 5th of 2009. On Friday, on CNBC later in the afternoon, Rick Santori had my good friend on Peter Elides from Stock Market Cycles out of Santa Rosa, California. I've known Peter more than 50 years. He's one of the best technical guys you'll ever meet. He's probably one of the pure researchers in stock cycles, and he believes this cycle high that we're looking at will not be seen for decades, much like we had in 2000. So it's going to be interesting to see whether this is going to happen or not. We're right over the time. You just have to wait and see. If we're strong this week, this is all wrong. And if we're not strong, this is right, and pay attention to it, because it will work. But you just need to be a little bit patient here and see what happens, because when they feed you tapioca every day, pretty soon tapioca gets a little boring, and I think we're getting a little too much of that right now. Everybody believes that we're in the process of going higher forever. Ask yourself the question: if things are so good in China, why did they drop rates 0.5% and reduce the reserve requirements? They didn't do that because business is going crazy. The other thing that is important is to look what's happening to commodity prices, folks. We're getting, crude oil is much closer to the lows. Natural gas is, well, not many people use that, but natural gas has just fallen out of bed Friday, and then today it gapped down another 7 cents. So, we're having some serious, deflationary things happening, and whether that means anything, we'll wait and see if that's going to be the case. But that's what we're looking at as we watch these things right now. Markets have sold off just a tiny little bit. We're now down, and whether it's going to continue or not, one has to wait and see. When we look at the bond market, 1 second, folks, please. I have a dry throat. As we as we go through some of these charts this morning, it was very apparent to me that there's such critical levels that it really is, very, very important to watch these patterns, because the fact that they hit the perfect numbers on all of them. The odds of that happening, folks, is very Excuse me, folks. I'm afraid I'm going to have to take a break from the radio show one of these days because I'm losing my voice a little bit every day. So this might be my last show for a while. So we'll see. But I'm not I'm not doing that to hide from anybody. It's just getting more and more difficult for me to get the words out. That's the bottom line. So remember that these patterns, certainly can fail. And I wanted to show you one of these that we talked about last week that is really failed badly as of Friday. And you'll notice when you see this market right here that I posted here for natural gas, I haven't put the actual prices for today in because we're now trading down at 217 in the natural gas. So it has just absolutely collapsed below that 1.618 expansion. And had you bought this, the risk was $200. You would have been out of it, very, very quickly. But, buying it on a Friday with a long ranging bar down, that is not a good thing to do. You always want to wait till the next day. And this is what's happened is we've gapped down sharply Sunday night, and now we're down another 17 cents. Which is 17. That's 3,400. So that's quite a bit in that market for natural gas. So that's falling pretty much out of bed. I think the most important things that we're talking about here today is this open interest thing that we have going on, possibly in the CME, where the equity futures did not increase open interest. That means there's no new buying coming in. It means it's short covering. This happened to gold and silver when it was topping. I watch those all the time, and when I see something pop up, I'm just reporting it to you to say this is what we're watching when we're seeing this. And the fact that we're hitting so many of these numbers and ABCD patterns at the right time, it is really amazing. We've got the Bradley date this week, the full moon tomorrow. So there's a lot of stuff that you want to be able to pay attention to at this time because you want to be looking to, cover your long positions if you're long. And if you're looking to go short, try to find a spot where you can, get in and maybe take advantage if it moves to the downside. But the similarities to what we have going on, to what we've had over the last three market highs. That was a chart that I posted into Tiger TV, the first. That's a chart that goes back of the New York Stock Exchange Index going back over the last 20 years. Each of those breaks was followed by a rally of somewhere between 2 months and 3 months, and we're into the third month, August, September, October, and so that's actually 2 months, but it's right at the 61% retracement in the New York Stock Exchange Index, which would mean that it is the weaker of the three rallies that we had in 2001, 2007, and the one we had now. All I can tell you is, folks, when you look at those charts of Microsoft, Google, and Amazon, and Apple, everybody knows the chart of Apple. We're trading around 118, I believe, somewhere in Apple. The high had been 132. The news is going to come out on Apple tomorrow. That'll probably be another move that we're watching where it might gap up into new high ground. But frankly, it doesn't really have the same power that it appears to have in the past, but that could change with the fact that they might sell, iPhone 6s to everybody in India and China combined. And with that type of news, who knows what could the market go? It could be very exciting. It would take a little break here, and then we'll wind up the pattern here. We want to talk a little bit about the euro before we
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, I'm going to show the chart of what I think is the most important. That's this 20-year chart of the New York Stock Exchange Index. We've also had a request to take a look at the breadth of the market. As you can imagine, with these kind of moves that we've had, the breadth has increased quite a bit. However, the number of new highs to new lows is not even, it's not even a factor, because it's they've had so many new lows that most of them are just bouncing back. We've had stocks like, Microsoft, Google, and Amazon, and what's the other one? One of the other big ones made a big new high, especially in the Dow, the Nasdaq, but the rest of them are really not doing that. Not doing the same type of thing, as you can tell by the New York Stock Exchange Index. to take a look at it. I've been asked to comment about the currencies. The euro is in a very strong bear market. We've been talking about for a long time. On Friday, we said look for 70 pip rallies to sell. Last night, it rallied 72 pips. Up to 110, 30 something, and then what does it do? It just drops again and makes new lows, down another 100. So it is really looking like it's heading towards that area somewhere between 105 and par in the euro is what we're looking at. There's a lot of talk now about the Chinese yuan. It has replaced the euro as the number 2 currency in the world. I frankly find that hard to believe, but that's what they're feeding us. So you have to put your little bib on and sit in your high chair and let them feed it to you. But I find that hard to believe because most people don't even know what the renminbi is. But that's neither here nor there. The key here is to watch what's happening with the open interest in the stock index futures. That's a very important fact because we've seen this before many times, not just in silver and gold, but we've seen it in cattle and soybeans and a few other things to tell us that we should be aware that this may not be a big breakout in stocks like people are telling us that it could be, a bull stock, a bull trap. So that's it, folks. Live every day in a attitude of gratitude, and may God bless. Do something nice for someone who has a lot less than you today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.